I'd like to welcome my guest. He is business and finance journalist Bryan Borzykowski to our show. Bryan has interviewed me many times, so this is actually going to be a lot of fun. I get to turn the tables and ask Bryan some questions this afternoon. His work has appeared in New York Times, on CNBC, BBC, as well as BNN Bloomberg and the Globe and Mail, among other media. And he regularly appears CTV News and SiriusXM. Bryan also is the founder and editorial director of All Caps Content, an agency that creates branded content for financial, tech, healthcare, and professional services firms. He has authored several personal finance books. I'd like to welcome to the show, Bryan Borzykowski. Good afternoon, Bryan.
It is good to see you, and it is nice to have the tables turned this time. Thank you for having me on your show.
Yeah, it's always great. I know we've done a lot of interviews together, and like those interviews, our interview today, I don't really look at it as an interview, more as a chat, I guess. Kind of just a casual conversation about what's going on in the world today, the world of finance. So, with rising interest rates on the minds of most people these days, Bryan, what is your opinion and what are you hearing from people you've spoken to lately regarding whether we've seen the last interest rate hike in Canada and in the US for that matter? Or do you think there's another one coming at some point in the fourth quarter?
I'm going to preface this by saying that out of the last year, out of all of this, nobody knows anything that's going to happen next. So it's amazing that we've been talking about this because I still, it wasn't that long ago that central banks were talking about inflation being transitory. And there was nobody that thought that interest rates would rise this fast, this high, this fast. So really, who knows? But I think the Federal Reserve has said that they do expect to raise rates again, at least one time. And when inflation isn't at that 2%, and if that is the target that central banks want to get to, and it still is, then they're probably going to have to get there because they're going to have to raise rates again to get that down. Going from 8% to maybe 4%, I think that was maybe some of the easier work that had to get done. Getting from 4 to 2 is not going to be as easy, and so that's I think what we're seeing now is how do they get that back down to 2%? I hope there's not a rate increase. I mean, the people I talk to. I'm talking to my friends who own homes. I run my own business, talking to other business owners, talking to lots of different people just in my course of work as a journalist and in the finance industry. And I think people would like things to kind of settle down right now. So nobody really wants to have another rate increase. Will we have a rate hike? A rate decrease? That's, a whole other question and probably not for a while. But again, if they're not going to get to that 2%, it does feel like we could see another hike at some point. I feel like we're close, though, to the end. People are getting stretched. I think that's pretty clear.
Yeah, and it's interesting. Yeah, I always talk about, is 2% even realistic, right? Like going from, like you said, from the 8 to the 4 happened fairly quickly, although not quick enough for, I'm sure, for the central banks. Going from 4 to 2, don't know if we actually can ever get there, right? With higher oil prices now kind of taking us in the other direction, is 2% even realistic in today's economy? And I think that's something that, it's been asked of the Bank of Canada and the Federal Reserve as well.
Yeah, and that's when I've interviewed fund managers and doing my own webcast with people, they seem to say that, and I pose this question, and they seem to say that they're going to stick to that 2%, but it is a question I think worth asking. I'm not an economist, and that's way above my pay grade, so I don't know the implications of sort of the central bank saying all of a sudden, hey, we're going to try and go to 3% or 4%, and the long-term implications of that. But clearly, they don't want to do that, or they would have done it already, I think. So they are still sticking to that 2%. They're still talking about that 2%. But it is a good question. How hard is it to get there? And what happens if we don't? And I think that's still a very open question right now.
Yeah, for sure. And obviously, because of these higher rates that we're dealing with right now, markets struggled in August to a certain degree, although the back half of August, they rebounded somewhat. We had a very rough September. With all that now in the rearview mirror, I've talked about perhaps a positive fourth quarter, but what do you think? Is there a reason to be optimistic for the fourth quarter? If so, what do you think the catalyst can be for a positive end of the year?
I mean, if you asked that maybe 2 weeks ago, perhaps there would be a bit of a different answer. But with fourth quarter, we're just starting October, and things aren't looking great. I mean, the S&P TSX is now below, in negative territory. The S&P 500 still about 11% high up on the year, which is decent, but not kind of where it was a little while ago. I think to me, it's everything is very uncertain. I think what we're seeing now is the bond yields, long-term bond yields increasing. That's putting a lot of pressure on stocks, because really the bottom line here is if you can put your money into a bond or a GIC paying a higher rate than you can get at than you can get taking on the risk of the market, you're going to put it into the GIC. I mean, you asked before about what am I hearing? Just conversations with my friends on WhatsApp. We were talking about this yesterday, and a friend of mine is like, I'm putting my money into a 6% GIC, and that's it. And hard to argue with that. My money's still in the stock market, so it's not great. But so I think the more people that figure that out, and if we see rates rise again, then I think the equity market will struggle. I think there's also some concern about how optimistic earnings are for 2024. There were optimistic earnings at the beginning of 2023. Those got downgraded, which made it easier for companies to beat analyst expectations. They're still lower than they were at the beginning of the year. They did beat analyst expectations. So we saw some positive momentum from some of that. But I think to me, it comes down to kind of where do the bond rates and interest rates settle? And are people going to pull back on spending? And I think we're starting to maybe see a slowdown. In Canada, we saw, GDP numbers have been flat, employment's getting a little weaker. And so I think if we start seeing that people stop spending, it's going to be hard for these companies to kind of generate earnings. And if we see that in the States too. So I think there could be you can never predict the bottom. So is what we're seeing now, the decline the last, little bit, is that going to be enough to kind of get things to the bottom and rebound again? I have no idea. But I think that it could probably at the very least be a rocky year ahead.
Yeah. And it's interesting. You mentioned the people that you speak to. I guess, a lot of money managers I know that you speak to over the last little while. What are they saying in terms of, are they more negative than you would, than you thought they would have been? Do they talk about the big bad word, recession? Do they think Canada and the US perhaps will fall into some sort of mild recession? Is that what the money managers are telling you?
It's interesting. Everyone's got a different opinion. Even people from the same companies, they're just, it's hard to know. And everyone kind of looks at different things. And so it has been a bit of a wide range of sort of thoughts on whether there's a recession. I think a lot of people now are expecting more of maybe of a soft landing. So not, the big deep recession that maybe people were thinking before. We are still seeing decent growth in the States. Again, jobs haven't fallen off the cliff like you might see in a typical kind of deeper recession. It feels like we're just kind of maybe moving along here, taking some dips. And so I think there still will be a recession. And I think people do expect something is going to happen. Maybe we're in one now. Again, we're seeing GDP numbers. We were negative the last quarter. It's kind of flat this quarter. We could, at least in Canada, we could be in one now. But it may not be the big decline. Now, of course, that a lot of people are nervous about a housing crash. I'm not as I think the people are resilient. I think the housing market may not. What's a crash? 50%. It's hard to see that happening. Prices are softening, but if we do see a big crash and people need to sell, or we're putting people in a tough position, then yeah, maybe there could be a much deeper recession in Canada. I think that's partly why we're seeing the Canadian markets fall more than the US markets, because of nervous over the financial sector and people paying their mortgages. We haven't seen kind of yet the renewals, I think, in a big way that is really hasn't shown yet what's going to happen. And that's coming. So it could be a deeper recession here. But the people I'm talking to, I think consensus is yes, recession, maybe not as hard as we had thought a few months ago, something softer, but we probably won't avoid it.
Right. And I guess for my last question, I want to kind of tie things back to my first question. And, both of us have mentioned interest rates, I don't know how many times in our conversation just now. And obviously these higher yields on primarily government, US government treasuries, so government bonds, with the 10-year now approaching 5%, the 30-year going over 5% recently. Obviously, this is causing a lot of grief for the equity markets, for the stock market. But this is something we've known. We've known the Fed is going to move rates higher. Why do you think interest rates are moving now, and why are they moving so fast? Is it just simply people are now finally coming to grips with what the Fed and Bank of Canada has said all along?
I think there's something to be said for that. Yeah. And you're right. I mean, the market works in weird ways. You sort of see these things coming, but, things don't kind of react right away, or sometimes they overreact initially and then rebound. And so it's hard to know exactly why now. I guess there's a couple things. Is that the Fed, did say that they're probably going to have to raise rates another time. You're starting to see much more quantitative tightening. So the Fed is selling, bonds into the market. They're kind of flooding the market with bonds that they had purchased during the quantitative easing, and that I think is putting a lot of more supply into the market. So rates have to go higher if anyone's going to buy that supply. So I think we're starting to see that. I have a chart on my other screen here looking at kind of how things have declined, and it really has picked up since about April. A lot of the Fed's balance sheet has really kind of declined because they're selling some of those bonds. So I think part of it is just people kind of figuring this out, plus that announcement of interest rates. And as we get to the end of the year, the Fed did say likely another rate hike before the end of the year. We're not that far off. And so I think as we get closer to that, maybe the market's anticipating this hike's going to happen, maybe more hikes. It's amazing. Midway through the year, there was an anticipation, and I never understood it, but that there was going to be, 2 or 3 cuts before the end of the year. And I will say most of the people I spoke to did not understand that either, but the market was pricing those cuts in, thinking, I guess the recession would be worse. The Fed would have to act. Clearly, that's not happening now. And it wasn't that long ago that those cuts were priced in. So now they're not priced in anymore. They're priced in for next year, but there's an expectation that the rates will just get higher. And I think that's what's happening now.
Yeah, it's interesting. Like you said, the the recession that they were predicting for midway through this year, they've now pushed that off to I'm sorry, my throat's a little sore. Midway through 2024 now, maybe even beginning to midway through 2024. So yeah, it's I don't even think the Fed knew or can predict, like you said, it's too far out. When they first started this hiking cycle, they thought maybe a few hikes and they'd be done. Here we are 10, 11 hikes later, and they're still talking about perhaps one more. So yeah, central banks, I think they're just going with, as they say, following the data and adjusting accordingly. So it'll be interesting to see what happens in the fourth quarter. But Bryan, I want to thank you again for coming on the show, for allowing me to turn the tables on you and ask you all the questions this time. You've been great, giving us some great information, some insights as to what you're hearing out there and what you think. And thank you so much for being on today.
Thank you so much for having me anytime, and great chatting again.
All right. Excellent. Take care. We'll talk soon.